and welcome back to Boni's Life. It's your host, Boni, and today we are diving deep, and I mean deep, into the world of Ethereum. We're going to cut through the noise, the hype, and the FUD to answer one simple question. What is the true and fair value of ETH right now in early 2026? We've all seen the roller coaster ride, the dizzying highs, the gut-wrenching lows. As I'm recording this on February 24th, ETH is trading at around $1,816. That's a tough pill to swallow for anyone who bought in at the all-time high of nearly $5,000 back in August of 2025. We're looking at a market cap of about $219.6 billion, with a 24-hour trading volume of over $20.5 billion. The market is bleeding, with a 5.9% drop in just the last 24 hours. So the big question on everyone's mind is this a fire sale, or is this the new normal? Are we staring at a generational buying opportunity, or are we catching a falling knife? Well, today we're going to find out. I've just completed a massive research report, and I'm going to share the key findings with you. We're going to look at multiple valuation models, the impact of institutional money, and the game-changing role of ETFs. And most importantly, I'm going to give you concrete, actionable trade setups for different market scenarios. So grab your coffee, get comfortable, and let's talk about the real value of Ethereum. All right, let's first set the stage by looking at the current market performance. As of today, February 24th, 2026, the crypto market is a sea of red. The global crypto market cap is sitting at around $2.25 trillion, down about 4% in the last day. Bitcoin's dominance is holding strong at 55.9%, while Ethereum's dominance is at a modest 9.72%. This tells us that in times of uncertainty, a lot of capital flies to the relative safety of Bitcoin. Looking at the ETH chart, it's been a brutal start to the year. We're down over 63% from the all-time high. This kind of drawdown is scary, but it's not the first time we've seen it. In 2018, ETH crashed a staggering 94%, and in 2022, it dropped 82%. So while a 63% drop is painful, it's within the realm of historical bear market behavior for Ethereum. The key is to determine if the fundamental value has been destroyed or if the price has simply detached from the fundamentals. Now let's talk about the institutional players, the big money. The launch of spot Ethereum ETFs in mid-2024 was supposed to be a game changer, and in many ways it has been. We're seeing a total of $12.37 billion in assets under management across all ETH ETFs. BlackRock's iShares Ethereum Trust, the Ether, is leading the pack with an AUM of $5.85 billion. That's serious capital. However, the recent price action has been heavily influenced by ETF outflows. Just yesterday, on February 23rd, we saw a net outflow of over 25,000 ETH. This shows just how much power these institutional flows have on the price. When they buy, we fly. When they sell, we feel the pain. So that's the current picture. A market in a state of fear, a significant price drawdown, and institutional players who are currently hitting the sell button. It looks bleak, but as contrarian investors, this is exactly the kind of environment where we should be looking for opportunities. This is where we need to dig into the fundamentals and figure out what ETH is really worth. So, how do we determine the fair value of something as revolutionary and complex as Ethereum? There's no single magic formula. That's why in my research, I used a multimodal approach to get a comprehensive picture. I looked at everything from traditional discounted cash flow models to crypto-native metrics like Metcalfe's law and the NVT ratio. Let's start with the more traditional models. A discounted cash flow, or DCF analysis, is a method used to value a company by forecasting its future cash flows and discounting them back to the present day. For Ethereum, we can use network revenue, the fees paid to use the network, as a proxy for cash flow. Based on this, different models, like the one from Van Eck, project a fair value for ETH anywhere from $3,500 to as high as $11,849. That's a huge range, but even the most conservative estimates put ETH at a significant premium to its current price. Then we have crypto-native models. Metcalfe's law states that the value of a network is proportional to the square of the number of its users. If we use the total value locked in DeFi as a proxy for network users, this model gives us a staggering fair value of nearly $10,000 per ETH. Now, this model has its critics, but it highlights the power of network effects. The more people who use Ethereum, the more valuable it becomes for everyone. Another interesting model is the price to sales or PS ratio. Just like with a traditional company, we can compare ETH's price to its sales, which in this case is its network revenue. Using a conservative multiple of 25 times, this model gives us a fair value of around $3,450. And if we look at ETH as a yield-bearing asset thanks to staking, the revenue yield model suggests a fair value of over $4,700. So what happens when we put all of these models together? We get a weighted average, a base case, fair value. And that number, my friends, is $4,100. Let that sink in for a moment. With ETH currently trading at $1,816, our base case scenario suggests a potential upside of over 125%. That's the kind of asymmetry that gets me excited. But of course, the market isn't always rational. We have bull markets and bear markets. So I've also developed fair value estimates for these different scenarios. In a normalized bull market, with strong ETF inflows and positive sentiment, our model shows ETH reaching $9,800. On the flip side, in a prolonged bear market, we could see ETH drop to a floor of around $1,450. This range gives us a much clearer picture of the potential risks and rewards. Okay, so we have our valuation framework, we have our bull, base, and bear case scenarios. Now for the most important part, how do we trade this? I'm going to give you 3 different trade setups for 3 different types of traders. If you're a long-term believer in Ethereum and you have a time horizon of 3 to 5 years, this is the setup for you. Your strategy is simple: dollar cost averaging, or DCA. You're not trying to time the market, you're accumulating ETH at regular intervals, regardless of the price. Your thesis is that the fundamental value of Ethereum will continue to grow and the price will eventually catch up. Your entry point is now. With the price at $1,816, you're buying at a significant discount to our base case fair value of $4,100. You should be setting buy orders all the way down to our bear case floor of $1,450. If the price drops, you're not panicking. You're accumulating more at a cheaper price. Your profit target is our bull case scenario of $9,800 and beyond. You're not using a stop loss in the traditional sense. Your stop loss is a fundamental breakdown of the Ethereum network, which is a very low probability event. This is a high conviction long-term play. If you're a swing trader with a time horizon of a few weeks to a few months, you're looking to capitalize on the volatility. You're not a hodler, but you're also not a day trader. You're looking for high probability setups based on technical analysis and market sentiment. Your entry would be a confirmation of a market structure shift on the daily or weekly chart. You're looking for a clear break of the current downtrend. A good entry signal would be a reclaim of the $2,200 level, which has been a key area of support and resistance. You could also look for a bullish divergence on the RSI, where the price is making lower lows, but the RSI is making higher lows. This is often a sign of a trend reversal. Your profit target would be the next major resistance level, which is around the $2,800 to $3,000 area. This is where we saw a lot of consolidation before the last leg down. Your stop loss should be placed below the most recent swing low. If the price makes a new low, your thesis is invalidated and you get out. This is a more active strategy that requires you to pay close attention to the charts. If you're a short-term trader, you're looking to make quick profits from small price movements. You're in and out of trades within a few hours or even a few minutes. This is a high-risk, high-reward strategy that requires a lot of skill and experience. Your strategy would be to trade the range. Right now, ETH is in a range between roughly $1,800 and $2,000. You're looking to buy at the bottom of the range and sell at the top. You're using tools like the 5-minute and 15-minute charts to identify your entry and exit points. You're also paying close attention to order flow and liquidity. You're looking for areas where there are a lot of buy or sell orders, as these are often areas where the price will reverse. Your profit targets are small, maybe 2 to 3%. Your stop losses are tight, maybe 1%. You're taking a lot of small trades, and your goal is to have a high win rate. This is not a strategy for the faint of heart. You need to be disciplined, and you need to be able to manage your risk effectively. So there you have it, a deep dive into the true and fair value of Ethereum. We've looked at the current market, we've analyzed multiple valuation models, and we've laid out 3 concrete trade setups. The key takeaway is this: despite the current fear and uncertainty, the fundamental case for Ethereum remains incredibly strong. Our base case valuation of $4,100 suggests that ETH is significantly undervalued at its current price. Whether you're a long-term investor, a swing trader, or a scalper, there are opportunities in this market. The key is to have a plan, manage your risk, and stay disciplined. Don't let the short-term price action shake you out of a good position. Remember, fortune favors the brave. And in a market like this, bravery means doing your own research and having conviction in your thesis. That's all for today, my friends. I hope you found this analysis helpful. If you did, make sure to hit that like button, subscribe to the channel, and let me know your thoughts in the comments below. What do you think is the fair value of ETH? And what's your trading strategy? I'd love to hear from you. Until next time, stay safe, stay profitable, and I'll see you in the next episode of Boni's Life.